day, ladies and gentlemen. My name is Sengalide, Sales Lead of Musi Accounting Services, and today we'll be talking bookkeeping, right? This is mainly for SMEs and people who are still looking to get into business, mainly in South Africa, right? There's certain laws and legislations that govern how accounting records should be kept, how to get it going, and where it starts. And bookkeeping is in essence where it all starts, right? We'll first address the definitions that you'll need to know. So we as accountants, we have our own terminology and jargon which we understand, but because this is meant for your benefit and not ours, we'll be using layman's terms that's understandable to everyone. Alright, let's go. So what is bookkeeping? Bookkeeping is the process of recording transactions and events, right? So you go to a shop, you buy equipment that you need for your business, that's a transaction, right? Money has gone out of the account of the business, and a new resource or a new asset is coming into the business, which is the equipment that you bought. That's the transaction that you need to record. That forms part of what we call bookkeeping, right? So at the end of the tutorial, we'll be coming with an example that will maybe help you. Okay, but anyway, let's start. Definitions. An asset. So an asset is anything that the business can use in order for it to produce income, right? We're gonna be making an example of a services business, accounting maybe, or marketing. Let's do marketing. For a marketing business, an asset would be the cameras that they use. It would be outside of human resources, it would be printers that they use to create their sketches or presentations, right? Their vision boards. Whatever it is that they use that makes them create the amazing projects, that will be the asset, right? A liability is a debt, right? It's just a fancier term for debt. Liability is amounts that are owed to other parties outside the business, right? Let's say you took a loan in order for you to buy equipment. So now we have a liability towards the bank or whoever sourced the credit for you to make that purchase. That's what a liability is. These two that we've just spoken about now, they are further subdivided into two divisions. There's current and non-current. Current meaning within the next 12 months, that asset will have rotated out of the business, right? So with cash, for example, the 10 Rand that you get today for a purchase that was made of your stock, in 2 weeks' time, hopefully that 10 Rand is out. It's used to purchase out the stock. So it's got a quick turnaround time. Even your debtors, your payment terms might be 3 months. After the 3 months, they would have paid you back. It's no longer there, right? Same applies to current liabilities. If you're planning from a long-term contract, let's say a mortgage, 10,000 is due in this financial year, and then 50,000 will be paid over the remaining 4 years. So that 10,000 will be recorded under current liabilities. It will be realized within the next 12 months, right? Okay, and then we have non-current. Non-current means longer than 12 months. After 12 months, it will still be there. Camera that you buy, it will still be there. The computers that you buy, it will still be there after 12 months, hopefully in any case. Same applies to liabilities. For the mortgage example, the balance that will not be settled within 12 months will sit within the non-current liabilities part of what we call a balance sheet or an SFP, but we'll get to that later, right? And then there's income and expenses. So profits and loss, a lot of people are comfortable and know what this is. Income is any money that comes into the business, right? Your sales. It could be interest that you receive in a savings account somewhere. It constitutes as part of income, but we usually separate it, right? We separate sales and revenue from other sources of income. And then expenses, money that flows out of the business to take care of working capital, right? So your rent, your salaries that you pay, fines, penalties, electricity, utilities, right? All of those are expenses that are attributable to the business. And then the reports that are extracted from your bookkeeping records, which are usually termed management accounts, the consolidated, when everything is put together for the full 12 months, we have 4 categories. So there's the SFP that I mentioned earlier, also known as the balance sheet, the statement of financial position. This addresses the assets and liabilities of the business, and it's a snapshot of what's happening at that point in time, right, at the end of your financial year. Then we have the statement of cash flows. It shows per the different categories how money was flowing in and out of the business. So it separates operations, it separates investing activities, it separates financing activities. Financing being mortgages, long-term loans and the likes. Investing being assets, right? And then the other being ops, normal operations. And then we have the statement of changes in equity. So changes in equity being you putting in money towards the business as a director or founder of the company. So that will all go to the SCE, statement of changes in equity. And then we have the SPL, or statement of profit and loss, which a lot of people are comfortable with. So that will show your income and expenses as well as your net profit for the year. What's usually attached to your annual financial statements or the report I was talking about is what we call notes. Notes explain these 4 aspects of reporting in your financial statements so that your financial statements are understandable to third parties and other stakeholders of the business. Okay, so let's get into bookkeeping practically. Okay, hi guys, back. Right, so we've sort of outlined bookkeeping across the different aspects of it and made some examples. Don't worry, a picture of this will be attached to this clip so you can probably see what's written. I'm just going to quickly run through the examples so that we can make a practical example at the end and explain just a little bit further about bookkeeping. We're trying to keep this tutorial under 10 minutes. A lot of pressure, but it's possible. So, assets. Example, for current assets, your debtors, or what's the other word for debtors? It's accounts receivable. Exactly the same thing. So these are your customers that haven't paid you as yet. They qualify as accounts receivable or debtors. Your bank balance, yes, it's a current asset. Long story why, but when you look at your financial statements, right, the balance sheet, your bank account details will be displayed under the current assets, right? Another example is trading stock or inventory. Excuse me. We're hoping that you sell at least within the 12-month period. Non-current assets, we have PPE, which is property, plant, and equipment. This will be the tables, the chairs, the cars, every single asset that the company has that is not for sale, or rather the intention when you buy it is not to sell it to your clients or your customers, right? And then there's this aspect to it called depreciation. So some depreciable assets, which, let me not make that example. For example, your laptop, if you bought it in 2012, it's not as valuable as it is. It's not as valuable today as it was in 2012, right? So that's where depreciation comes in. And it's something that you need to take into account, because if, for example, you need to submit your management accounts for whatever reason, it could be a tender or your other stakeholders want more information about the business, right? The depreciation then reflects an accurate balance or value of the non-current assets of the business. That's why it's important to track that, right? And then the liabilities, your creditors, these are people you haven't paid yet. This could be your landlord, this could be your suppliers for your stock, right? And then short-term loans, it could be working capital related, or whatever needs that your business might have within the 12-month period, right? Non-current liabilities, your long-term loans, and mortgages that may be applicable to the business. Income, typically sales and other types of income. Yes. That's what goes into your income. Expenses, we've just listed for examples, your rent, your utilities, your salaries, as well as repairs and maintenance that happens as part of your trade, right? You could be repairing your tables, you could be repairing your chairs. It's an expense that needs to be documented as part of your bookkeeping. The residual interest between these two, right, that's the profit. So when you look at your SPL, statement of profit or loss, there's money that you get. Let's say you got 5,000 and you spent 3,000 in expenses. The 2,000, that's the residual interest. That's what we call equity, right? Your net profit. This is before tax. Yes, speaking of tax, tax implications need to be taken into account, but for the purposes of making this simple, we're not going to be touching tax at all. That will be in a different tutorial. And yes, these are the different aspects of bookkeeping. Now let's get into the practical example using each of these categories for our marketing services business. Okay, now that we've outlined the different aspects of bookkeeping, let's make an example, right? I want this to be as personal as possible. So I'm not going to be writing anything on the board, but we're just going to be talking, right? Let's say we have a marketing company called Sam's Marketing Services. We work with SMEs, we design brochures, pamphlets, we manage social media accounts. That's the work that we do. Those are our services, right? And in order for us to do this, we need staff, we need offices, we need high-end technology. So that will be Mac laptops, that will be, okay, of course, Wi-Fi. Yeah, that's the sort of equipment we need, right? So what will go on this income? That will be the sales. When I issue the invoice for the client for the services, it's done, I've delivered it. Excuse me, that's what's going to go under revenue, right? Revenue, sales, same thing. And other forms of income, those, whatever income that you get that's not part of your main trade is going to be classified as other income. Okay, and then let's move over to expenses. Expenses would be your rent, your utilities, your salaries, right? You need those in order for you to keep running on a month-to-month basis. So for us, it will be exactly the same things. We need all of those four in order for us to work, right? Assets, starting with non-current, our assets would be, for example, the laptops that we bought. Let's say we bought 5 laptops on credit from a certain supplier over 2 years, right? So when we buy it, we'll record it as an asset. We won't credit bank because it was a loan. So we'll credit long-term loans, or yes, there's a portion of it that will be long-term because it's over more than 1 year. And then we're going to debit assets because we now have nice new laptops in order for us to do the work that we do, right? So those assets will be sitting under non-current assets, and then under current assets will be our debtors, our clients that haven't paid us as yet, but we expect to receive that money within the 12 months of the financial year. The non-current liabilities, it will be the portion of the debts that we owe to our supplier of laptops that is above the financial year, above the 12 months, right? And then the current liability will be the portion that we owe to the supplier within the 12-month period. Basically, that's what, those are the categories of bookkeeping, bookkeeping that you need to be comfortable with. In order for you to manage your own finances, you can get a bookkeeper to do this for you. You can do it for yourself. You can do it on an Excel sheet. Some people are still old school, and that's perfectly fine. We on our side as Untitled Accounting Services, we make use of cloud technology, so you have live access to your records, and our whole team does as well. So whatever time you want to see what's happening, get a snapshot of your business, you just log on and see what we're doing and see what's happening with your business. Live technology, right? Yeah, that's the amazing part of it. And bookkeeping, look, it's going to help you in terms of your records in terms of SARS, your filing. How else would you know what goes into what category, right? what we use as a guideline, the accounting principles and accounting procedures that we use. It's per IFRS. IFRS is International Financial Reporting Standards. It differs for SMEs as well as the bigger giants in the yard. It's a good reference point in order for you to know how to allocate what, right? That's how we as accountants work. That's the guidelines that we are governed by outside of our professional bodies. But I know time is tight. We tried, we couldn't make 10 minutes, and that's fine. But I hope you did derive some sort of value from this tutorial. If there's still any questions that you'd like to address regarding bookkeeping, we'd love to. Just leave us a comment or say something. Email us, call us. We're available. I won't say 24/7, but our email is available 24/7. And we look forward to welcoming you to Accounting Services. Thank you so much. Have a good day.